I'm joined by my friend Abhay Agarwal of Piper Sireca, who is joining us on the show. Abhay, good afternoon. Thank you very much for joining us. Congratulations. Your portfolio, large part of it is making new high. I was tracking. Let's start by understanding your call on the platform companies, the tech-enabled companies. They are the ones. It was Info Edge yesterday. IndiaMart is doing its own thing. You understand that space very well and got in a little early. What's re-rating that counter or that space?
Thank you, Ajay, for having me on the show. So you and I have been talking for quite a while now on how we look at companies that are using technology to disrupt existing industries and also to benefit from new emerging white spaces. And some of the names that you mentioned are right in the middle of it. Companies that are using technology platforms, digitalization, the speed of which has gone up dramatically in the post-COVID era, where customers have adapted to digital channels very fast. So we are seeing that across the board. You mentioned IndiaMart, the B2B adaption of SMEs onto an online digital platform has been quite rapid. Same goes for a company like MCX, where it is seeing an increase in number of traders, investors on one side, new product launches on the other side. So I think a lot of these companies that have created very solid platforms, even in insurance space, I would say somebody like an ICICI Lombard or HDFC Life are using digital tech very well to acquire new customers, service existing customers. I think that is a space that will continue to play out for many years to come.
Abhay, what's your view on the way huge amount of liquidity continues to come to emerging markets? India is one of the higher beneficiaries of them. I was looking at the data. In 2020, we were net receivers of foreign flows compared to many other emerging markets. The way things are taking shape globally, is there reason to be concerned, or do you think there is still some more room before the flows may ebb away?
No, I don't see the flows ebbing away at all, Ajay. In fact, seeing what is happening around the world, I think the flows will actually increase. And it was only in November and December that we got record-breaking inflows, FPI inflows in India. Prior to that, rest of the year was either negative or flat. And I think this year we will see incremental flows. I mean, China gets around $120 billion of FPI flows every year. We are getting 25 billion. So it's not a large number anyways. And when you look at the global debt, which is now trading at negative yields of $18 trillion, I think a large part of that debt will anyways move into higher yielding assets. Emerging markets will get their flows. Emerging market equities, including India, will get its flows. So I think these flows will continue unless there is a black swan event. I don't see these flows reversing at all.
Right. Abhay, private banks is also something which you look at very closely. A slew of banking sector companies or banks have actually declared their third quarter updates. Broadly how the quarter fared for them, right from HDFC to Bandhan to IDFC First Bank and a few others. What did you read from the initial numbers which have flowed in? There was an absolute risk aversion as far as financials were concerned at the start of COVID, talking about the April, May, June quarter or thereabout. Now everybody seemed to be falling back in love with private banks. What are your thoughts on the numbers and overall?
Last year, towards the October, November time, there was this fear, and it was justified that the moratorium rates were unknown and how much of loan restructuring will need to take place. It was an unknown number. So I think investors, rightly so, were cautious then. But now it is emerging that the numbers moratorium numbers are not as bad, nowhere close to what people were expecting them to be, which means that more people are paying back. There is enough liquidity in the system. Businesses are opening up. They are trading. SMEs are borrowing. So one number we still haven't seen very clearly, and we were waiting for that to come through, is the credit quality, to see if any credit quality has weakened further, slippages, any new slippages in the private bank space. But if that doesn't happen, I think the private bank numbers, earning numbers and growth numbers this year will be better, definitely better than last year.
Since you track personalities also in this space closely, what did you read of Mr. Aditya Puri becoming an advisor with the Strides Group? All sorts of conclusions are being made, but what do you think would have happened? Is his interest in pharma, or what do you read it?
I think it is, Strides Group is very fortunate to have somebody like him as an advisor. I can only hope that they use him well for, the kind of, value creation he has done over the last 20 years at HDFC, 25 years at HDFC Bank. If they can use even part of that, I think it will be a great outcome for Strides. And Mr. Puri, knowing him, he's very forward-looking. So if he has shown an interest in pharma, I think that's a good sign that, somebody like him is supportive of the efforts by Indian pharma industries to grow, scale up, and become, much bigger in size from here on.
Let's shift focus and talk about real estate space, Mumbai Realty. Stocks like Sunteck, Mahindra Life, Godrej Properties stands out there. I have again saw a very big interest from the investing trading community. The government has done its own bit in terms of lower registrations, and now even premiums have been cut. What are your thoughts on the potential this move can actually do? We spoke to a very senior minister around it and got an indication that other states in the country are also mulling similar moves in order to boost the space, and it has a ripple effect on NBFCs, cement, steel, everything. Your view on realty stocks and also the potential of this move, the way governments are now taking a look at this sector, it can have on other sectors.
So I think Maharashtra government has shown by examples that it is not the percentage of duty, but it is the number of transactions that drive government's revenue. So if you look at the December data, the Maharashtra government stamp duty collection was at an all-time record, despite the stamp duty being cut to 2% from 6%. So which means that there is pent-up demand. There is, if the government is supportive of the industry, of both the developers and the buyers, this industry can really grow rapidly. And I think personally that 2021, we will see pretty solid growth in the real estate sector, which has done nothing for investors for last 10 years. In fact, most of Mumbai prices, if you see, are either same or lower than 2010 prices. So reality has that, the way it moves is that it's non-linear, and then it suddenly moves. I think we are at a cusp of that move in real estate. There is adequate demand. Affordability index is at an all-time high with a cut in interest rates and lower prices. Inventory is getting sapped up very fast. The industry has consolidated with fewer number of players. RERA, GST related issues are behind us. So I think I would not be surprised if we have in next 3 years one of the leaders in real estate joining the Nifty, which would probably be Godrej Properties.
Right. Okay. Any space, Abhay, in your view, which the market is completely ignoring right now, but could surprise, though everything in the market actually rallied, commodity, banks, IT, pharma, but any ignored area of the market in your view?
Yeah, I think, you're very right. I think nothing seems like ignored right now. Investors are going through everything with a fine tooth comb to see where is value and what emerges. We had a discussion offline earlier about Dixon, and I think a lot of people think that Dixon is overvalued. It probably is if one was to look at the recent numbers and value it on the basis of next 1 year earnings or 2 year earnings. But I think what market and investors are missing out is that this is really the Y2K movement for Indian manufacturing industry now, with government support for scaling up large organizations, bring in cost efficiencies, marketing efficiencies. I think what people have to look at companies like Dixon and other manufacturing companies is to say that can these companies do what IT companies like TCS, Infosys, Wipro did post 1999, where they scaled up massively, and that scale brought tremendous rewards to investors and continues to bring. I mean, TCS now is at an all-time high. So going back 20 years back, these were not consensus trades. They were very expensive. But look at the kind of value that TCS has created at 11 lakh crores of market cap. Dixon is just about 20,000 crore of market cap. So I think for investors, they need to look at what is going to happen, which are the white spaces, and once in a decade opportunities.
Right. All right, Abhay, we'll let you go on that one. Thanks so much for joining us on the show today.
Thank you.